welcome to Fintech Talks, a podcast where we explore people, ideas, and innovations shaping the future of financial services. My name is Laura Gibson-Lamothe. I'm the executive director of the Georgia Fintech Academy, and today's conversation is all about bridging the gap between digital assets and traditional finance. Two worlds that are no longer just adjacent, but digitally intertwined increasingly. We're challenging old assumptions, and institutions are trying to keep up with the pace of change. But someone who's lived in the intersection of both sides, Annelise Osborne, who's currently Chief Business Officer at Kadena, is here to join us today. She's also the author of Hoodies, Innovating Digital Assets for Traditional Finance. And rather than reading her full bio, which is full of impressive milestones, I'm going to let her introduce herself in just a minute. But I'm also especially excited to welcome a student co-host, or I should say formerly student, Christian Samuel, who graduated from Georgia State University. He served as one of the leaders of the Fintech student organization, and I worked closely with him through the Georgia Fintech Academy. He has been deeply engaged in building a community around Fintech, innovative and excited students. And so to get the conversation to start today, I wanted to start off with Christian, just hear a quick update on how it's been since graduation and what's going on in your life currently.
Gotcha. Thank you, Miss Laura. So, hi everyone. I'm Christian. I graduated from Georgia State in May with a degree in business analytics. For the past 2 years, we started the Fintech organization at Georgia State, and there I served as the vice president. There we aimed to bridge the gap between technology and finance, and connecting students with employers was a big mission of ours. And working closely with the Georgia Fintech Academy definitely helped us with those connections. Right now, I work as a business systems analyst for an auto finance company called Global Lending Services here in Greenville, South Carolina. And I also serve as the new advisory board for the FinTech organization as well. So that's just a little bit about myself.
That's so exciting, Christian. So glad to have you back and see you progress since graduation. Obviously, we can't let you go away too fast. Annelise, so excited to have you here on the podcast today. Can you give us a quick background on you and what led you to becoming an author of such an amazing book?
Well, thank you so much. I apologize that my dog is barking in the background. Thanks so much for having me. I really appreciate it. I did traditional finance for a number of years, and then I kind of branched off into the world of blockchain and how blockchain can upgrade finance. And I started in this, there's so much to unpack about writing a book. In 2018, I did a lot of board work, and I was asked to join this regulatory task force for ICOs, which I wasn't even familiar with them at the time, but initial coin offerings. But understanding what blockchain was, it kind of got me into the space back then. And so I had my own startup in 1819. I worked, which was a wild ride. We can talk about that. Was a failed startup, I have to say, because it did not fly, but we did some really innovative, amazing things. I worked for Arca, which was a crypto hedge fund. And then we created a tokenized treasury fund before Franklin Templeton, Wisdom Tree, and BlackRock have tokenized treasury funds now. I left to write this lovely book called From Hoodies to Suits: Innovating Digital Assets for Traditional Finance, which is what you're referring to, Laura. Thank you. And it was really because there was a lack of education out there on what blockchain was and really the implications, even without using that word, the implications of what it does for finance, how it can upgrade finance. And so I felt that I had this book in my head after FTX happened. And FTX was Sam Bankman-Fried. There was a very large fraud case. It was a world of bad actors that gave the technology a bad name. And so I thought I had this idea for the book. And so I went and wrote the book. And really the goal of it is just an uplifting, educational, and ideally entertaining read about how this technology helps with the next generation of finance. So you asked why I did it. So it was really the fact there were no other books out there on capital markets. I never thought that I would write a book. I just had it all in my head, and it just kind of, fell out. And I really wanted people to become more educated. I wrote it for generally Bob, the finance guy, but who's kind of like risk compliance or whatever is skeptic on the technology and really how the world becomes more faster, cheaper, more secure, right? More efficient. That was the idea. Tech people, I've gotten rave reviews from tech peoples because they create the tech and they didn't understand the financial aspects to it. there's been a big hit with regulators and policymakers as well for them to learn more, and also some educators as well to be used in schools. And so yeah, so it's been super exciting. And then after that, I figured, how can I make a difference? And I thought it would be either from the institutional side or the tech side. And I went the tech side. So I've gone full crypto. I'm chief business officer of a blockchain. And my whole goal is to see how TradFi and DeFi merge. So lots to unpack there, but that was really kind of an intro when you were asking about how I wrote the book. I will say I spent 12 years at Moody's doing mortgage-backed securities before that. And I worked in commercial real estate and structured finance. So I did very traditional work, and now it is more kind of the way of the future as I look at it.
There was so many gems in what you were just saying, Annelise. And one of the things that I picked up on is through your experience, you identified an opportunity and you said yes to the challenge. And you said, let me go ahead and author this book. And then obviously the title of your book illustrate quite nicely the fact that there's a lot of folks that are watching this space and this environment and seeing how we're moving, or the lack of progress. But now there's been a lot of progress made more recently. I'm interested to know what you think from a next gen perspective. Why should they be excited about this space?
So I feel like students are the ones, millennial and Gen Z, really Gen Z, are the ones that are changing finance, to be honest. It's a very different world than it was when I was growing up or when I was 20. So this is a supercomputer that we hold in our hands. And we never had anything like that. And the fact that everybody wants things digital, they want things right now. And this generation was born with a computer in their hands. It's just a different level of efficiency expectation. And so if you think about, I always point to the floor of the New York Stock Exchange, just for an example. It used to be shoulder to shoulder. That's the only way people could trade stocks. Now it is absolutely empty, and we're not even on kind of blockchain digital assets. We're just computerized. Everything's digital. And so now they use the floor of the New York Stock Exchange for photos. And so this generation with I think the comfort with technology, the expectation of being able to swipe and manage accounts on your phone, like ATM cards are going to the bank, right? That I feel like is not, I rarely ever go to the bank. And so I can't, like, I just think this generation with Venmo and passing money back and forth, with the idea of investing, and also like a creator economy, not as many people have the regular jobs, and the jobs aren't like my parents' generation that they had one or two jobs. That was it. And now there's a lot more movement. Not everything is a W-2. And so this does come back to crypto. Also, a lot of, like, we're talking within the United States, there's huge benefits outside the United States too, where not everyone has a bank account. I want to send money to my family that lives in another country. So that's without even going into kind of crypto. But I love it because, I can stablecoin, you can transfer money immediately, and I have it today. So I was trying to put money, and not everything is investment, by the way. I'm generally focused kind of more on the finance side, but there's a lot of benefits to it that aren't necessarily money or securities. But I put money in my Fidelity account and my Robinhood account same time to see how it would transfer. Fidelity says it took 10 days. They said it takes up to 10 days for your money to hit your account for then you to invest. But with stablecoin and any sort of payments, you get it immediately. So if I had that money immediately, I can invest it today, not in 10 days. And it didn't actually take 10 days, but it does take a good I think it took 5 days, but it said up to 10 days. Robinhood, you can actually input some things that you get it immediately, but it's just not very efficient. And if you think about, if I'm running a large institution, there's trillions of dollars that go through the system every night. If I don't have to wait 2 days for a float and I can have it today, then I can put the money to work today. So it increases the velocity of money. So that's kind of something more for the finance side. The crypto side, or the idea of investing, if you have digital assets from an investment perspective, obviously there's one side that's kind of cryptocurrencies. So I'm less cryptocurrencies, but obviously that's been interesting to generally a younger generation. The idea of investing, Robinhood, for example, that I mentioned, the average age, I think 85% of the people on Robinhood are under the age of 35. And so it's a newer type of investment account. Also super interesting to me is that there was a study done, and this was a while ago in the UK, that 85% of Gen Z get their financial information from finfluencers first. before parents or anyone else.
Yep.
And so the idea of it's a social networking thing. So I feel like there's more opportunities to find investments through kind of friends. And again, before when we go to financial advisors, that's their business for the most part. And generally they've studied and they might have accreditations. So it's just a different way of thinking about things. And generally also from an investment perspective, the Gen Z is not looking to have their parents financial advisors. There have been studies on that too.
Yeah.
Also, if we're going to dive into it, Gen Z and millennial will soon own more than half the world's wealth, because there's a great wealth transfer, it's called, that's being passed down from baby boomers to millennial and Gen Z. Sadly, it is skipping my generation mainly because I am. That's okay. And so it's just interesting to think is that this generation that is much more digitally friendly, they expect things faster, they're more ready to challenge the status quo, which is partially because of, like, I feel like youth are more ready to challenge the status quo than kind of the older side. But I also feel like the generation is given more opportunities than say, and more opportunities to challenge the status quo than say my generation necessarily was. So we were more accepting of what we had to work with. So anyway, that doesn't specifically answer kind of the applications of blockchain, but just the fact of having the opportunity both from a money and from an investment perspective. So the idea of Robinhood, you can actually buy cryptocurrencies on Robinhood. You can also, part of that is, sorry, I'm going to ramble.
No, this is perfect.
Public markets today. So this is investing for kind of Gen Z. If you look at public markets today, there's so many fewer public companies than there used to be, right? And so more of the world is private companies. And what this technology is also offering to do is bring some more of those private opportunities to the hands of more people. Because right now, they're generally with the ultra high net worth. And this technology can make it lower cost for the back office side, so they can take lower minimum investments. So that's what Hamilton Lane, Franklin Templeton, Apollo have done with their private equity funds, is trying to find more investors. And so they've gone down, I think, to probably 250,000, but it's not 5 million, right?
Yeah.
It's not $5 million. And that's the first step. And so the idea is, people like us, maybe you're in the ultra high net worth category, but the idea of like investing $25,000 in a private equity fund that has, could have higher returns than the market. There's no guarantee for any sort of returns, but it just opens up a world of investing. And that's what, which I think is be interesting to these upcoming generations. And another thing I will say, ultra high net worth BlackRock study, when I studied finance, it was 60% stocks and 40% bonds was a balanced portfolio.
Mm.
If you look at this BlackRock study, which we can all find, it's ultra high net worth wealth or global wealth survey or something. It's ultra high net worth are 60% traditional assets and 40% private assets. So it's public. So instead of stocks and bonds, they're all linked into one, and then 40% are private investments. So it's very different. So why can't we have that opportunity?
Yeah. Wow. I mean, as an elder millennial, I think I resonate a lot of what you describe as far as what the next gen could look forward to with the adoption and some of the opportunities I think that are stemming from this conversation is, we do have a lot of folks who are interested in disrupting, whatever the status quo is, and they're coming up with solutions that could tap into blockchain and other technologies. Digital assets opens up for cross-border payments and some other things that have always been a pain point in the payment space. But when you mentioned the digitally native, that struck a chord to me because I'm like, yeah, Christian can attest. And Christian, I know for some of the conversations we've had in the past, you think digitally first. You're not thinking about going to a bank and doing some of these other, traditional practices when it comes to managing your financials. And so when that great transfer of wealth, and hopefully it's going to Christian and others happens, they're going to expect to have these user experiences that I think financial services has been trying to adopt and has been adopting obviously over the past few years, but that's going to be an expectation, the wealth market, where I don't think it is necessarily as much today. Christian, I don't know if you have any thoughts on any of that.
Yeah, no, definitely. I mean, a lot of great points. Of course, digital first, like since the moment like I kind of knew how to like walk and talk, there was some sort of device in my hand. Like I remember first thing I used was like an iPod, but ever since then, like from a very young age, having access to, like you said, like a mini supercomputer in your hand. And especially at this age now where there's so many different platforms you're able to invest on, uh, I can definitely resonate to the fact that I definitely go on TikTok or Instagram and you see like a reputable content creator that gives like some sort of financial advice. And that's definitely like, especially when you see they're not selling something like a course from the very like minimal research that you do about their page, then you kind of trust them like that much more. I also had a question for like a lot of listeners that don't know what is blockchain.
So I try to go a little bit less into what like the specific technology, because we don't talk about back to our phone. Like we're not like, how does the phone really work? It's more the applications of the phone and what it can mean for me. So what blockchain is though, is in essence, it was brought about if you think about Bitcoin. So I think most people probably have heard of Bitcoin, which is now in essence a digital currency that sits upon a blockchain. And so the blockchain allows that technology for people to transfer Bitcoin back and forth, it always to be held on a ledger and it to be secure, and everyone knows who owns what Bitcoin. And so that was the first blockchain. That rolled out in 2009. In 2008, the Bitcoin white paper came out. And then in 2010 was the first time that Bitcoin was actually used to buy pizza, which is funny if you think about it. It's been 15 years. Wow. 2000, yeah. So anyway, what is a blockchain? It's kind of like, think of it as like a big Excel spreadsheet, right? But you know what happens in every single block. And everything is recorded, it is time stamped, it's data. And you can't go back and change it. And so if you had, everyone points to, for a great example is if you've ever bought a house, you have to get title insurance. And the reason you get title insurance, because who knows if the person that sits in the house now really is the owner, or what if there was a lien on it 3 people back. So if you actually had blockchain, it would continue, like that one block would be the first owners, and then the second block would be the next owners, and it'd show all the transaction times and who was the real owner. And so that's a way to think about a use case to show, wow, we wouldn't need title insurance, because you wouldn't need insurance if you had the blockchain to know exactly where that came from, which is something that they're actually, one of the regulations in Europe is actually to do with products. Digital product passport it's rolling out on different things. I think next year is textiles, so clothing, to know the life cycle of that clothing, which is interesting. Also, anyway, there's all sorts of different applications, but if you think it as an Excel spreadsheet that everybody has access to, but it's not in one centralized place, it's decentralized. So no one person controls it. So it's not like if power goes out in my house, it disappears, right? The servers are all down because the power's out, because there's multiple nodes running globally, and that keeps it secure. Is that helpful?
Yeah,
And
it is.
from that, so what Bitcoin was the first blockchain, and you couldn't actually, you can't program a Bitcoin really. Like it is a Bitcoin. Ethereum came out is the next, and on Ethereum you can program the security or the token there. And so you can program it to have KYC AML. So you have to make sure that you're like, oh, I'm not a bad actor, so I can own this, which is what a lot of banks have to do. A lot of things in finance, you have to be identified. Or it can say, pay on this date this much money. Anything that is a mathematical equation can be codified. And so there's a lot of benefits. You could have smart money. You could have bonds that pay when they're supposed to pay, but not when they're not supposed to pay, anything conditional. There's all sorts of different things that you can program onto. There's so many more things we can program than we have yet, but we're getting there as the integration of blockchain is a little bit more accepted into kind of capital markets.
Right. Gotcha. Thank you for that.
Yeah, that was helpful. I think just like we've seen in a lot of, innovation and the advancement of technology, it takes a little bit of time for adoption. And once that, adoption pattern has happened, then there's innovation and people start thinking about the use cases where the technology can be applied. But it was really helpful to have you illustrate. I'm excited to see, I guess, kind of the advancement in the space in the future. I don't know, Christian, if you want to go to our next question from our list.
Yeah. So, Annelise, so what inspired you to write From Hoodies to Suits?
So you can laugh at this. My English teacher in 10th grade told me I'd never get an A in her class because I was too social, which is funny to me. Anyway, so that's always been in the back of my head. I'm much more of a math brain, but I'm like, really? So it was after the fall of FTX. I had always been working with institutions about how do we use blockchain behind the scenes. If we're talking about houses, Figure Technologies does loans on mortgages and or HELOCs, and they save almost like 75 to 1%, like I think up to 125 basis points. That's a lot of money. So say you're saving like 85, you're saving 85 basis points on every loan. And it just is such a cost savings that it allows money to be cheaper. So I feel like that's a real benefit. Decrease the reason you like tokenized funds. The reason they can offer it cheaper is because it's lower cost. As we mentioned about like with payments is huge now. We can talk about in a little bit. We'll get into kind of regulation, probably a little, just touch on legislation. But there's such a gap out there. And I feel like there's three holdbacks to institutional adoption, I thought. And when FTX went down, I was talking to a bank who said they had a cease and desist talking about anything with blockchain until the following year. And FTX had nothing to do with blockchain, really. It was really bad actors. And there were no suits in the room. It was a bunch of hoodies that kind of got over their skis. And like there's a lot of money around and you think, rules don't apply to me as much. There was no board of advisors. There was no risk committee. There was no one that was there actually oversight for that. And so I thought three holdbacks to institutional adoption. One is regulation, clear regulation in the United States, in any country, because this is global, right? It's not just here, but within the United States, we're like the global superpower. And to be honest, so much is backed by the US dollar. All of these stable coins, $250 billion of stable coins, 99% of them are backed by the US dollars. All these tokenized treasury funds, everything is backed by US debt, US dollar in some way. So it would be great to have clear regulation. Number two is education, the idea of what does this mean? And is Bitcoin and blockchain the same thing? And is it only used by frauds to launder money? And there's a lower percentage, I think it's a fraction of a percent of any crypto that's used to launder money. And it's about 5% of US dollars are. So this is also, these are all facts that are quoted in my book with sources. And so it's just unfortunate. So anyway, education. And then the last, I think, is interoperability, which is two ways. One, it's how does blockchain tie into the financial system? And then how does blockchain interoperate together? So I feel like education I could do something about. Right. And hopefully that would help the other two. And so that was really the impetus of writing the book. I thought I have this book in my head and I had no idea how to write a book, but other people were writing books and I just decided I want to do it. And I figure I put my head to something and I decide I want to do it and we make it happen. So, which is grit and and just keep going. Perseverance, I would say. If there's anything I can pass on to any listeners, it's just believe in yourself and keep going. Another thing is you write a book and it had to be 288 pages because it's a nonfiction book. And I used Wiley, who's a big publisher. You don't know, I spent 3 months writing the book. So 2 months, the majority of it, the last chapter is not fact, is my ideas. And so that took me another month. But then you're like, is anyone going to read this? Are people going to think how horrible it is? So I had an editor help me pull it together. But I remember sending it out so you can get these, people on the back reading or also giving me critiques. And I thought I would get a lot of negative critiques, or I did not. I did not at all. And so that was really interesting. I thought people would challenge me more. And even now it's been out for about a year and I've had really great reviews and I'm fine. It's a conversation piece, right? Let's talk about it. And so that was also interesting because you don't think about that when you're sitting there writing it, that, oh my goodness, this is for people to read. And anyway, so that it's been a great journey. I have loved it in the sense that it's expensive to write a book because you leave work, or I left work to write a book. I hired an editor to help me. So it is not a money-making thing, but it was just something that I wanted to do to kind of push this industry forward. But it's really been amazing to me. I was in Dubai at a conference and I popped my head in. I didn't register. I was there for 2 minutes because the people that I wanted to see were gone. Somebody chased me kind of out the door that was a super fan from Beijing.
Wow.
That to me who was a content writer. And that to me was like, wow, this is really amazing. My neighbors in my suburban New York world went to Brazil and someone told them to read my book. So they think I'm famous, which is hysterical because I'm not. But it's just, then I had, I've gotten some calls from random people who've picked it up that are very influential in the economy and that wanted to have conversations. So that's what it's about. To me, it's about making a difference for someone, ideally motivating people and inspiring them as well. Because I feel like innovation really takes all of us together to come up with ideas. And how do you come up with ideas is you start sharing them yourself. Like, I never thought that I would have been a founder in an industry that I didn't know as much about. This is an 18, but the people that were the founders were the hoodies, and they didn't understand regulation. They were working in securities, and security, like, finance isn't broken, but it can be better. And so that's where I figured, well, I know how, like, I understand enough of the technology as a non-coder, but I understand the applications, how this works, but the structure of finance that we have to follow. So we're working within regulation.
Yeah.
So that is kind of why I stepped up, and here I am today. And I love it. My job is constantly challenging. I never know enough, because in an industry that's continuing to innovate, there's always more to learn, but it's just really fun. It's really fun to see kind of progress we make, or things we build, or things that we can make happen.
I love the educational mission behind it. Obviously, what you've written translates into a great conversation point for a lot of folks. And hopefully for us to leverage as part of the classroom and the conversations we're having as well around blockchain and eventually crypto. I love that you hit on like some misconceptions. That education is critical, and you're kind of at the forefront of providing that thought leadership, I think.
Thank you. When I had looked, I read all the books you have to look and see what's out there and explain to the publisher, like, why this, why now, why me?
Yeah.
And it really was, there was digital dollar, there was stablecoin, sorry, which same thing, DeFi, and like crypto trading. But my whole thing is, blockchain can make our world more efficient. It's not necessarily the trading aspect. DeFi is interesting, which we haven't touched yet, which I'm happy to go into a little bit. So that's why I thought, like, I could be a voice out there to say that. And what's funny is the title, From Hoodies to Suits, the idea is that the hoodies created this probably four, I haven't checked recently, probably $3.5 trillion about. It was probably over three the last time I checked. They created this amazing capital market, right? And now, to get further, I think we need the suits to help along the way. And so I kind of start off the book. It talks about how, if we think about, Facebook, and we think how Zuckerberg initially would always wear his hoodie, right?
Yeah.
But then when he goes to Congress, he actually wears a suit.
Yeah.
So part of that is like the growth of the company, and the trajectory, and the idea of kind of Web 2, Web 3, just the idea of it being a startup to being an established company. But kind of so for me, the hoodies I have the greatest respect for hoodies, which are the entrepreneurs and tech people that brought us to where we are. Yeah. And I feel like the hoodies and suits need to work together, because neither of them can do it alone.
Yeah.
And so much of this ecosystem is really figuring out how to work together.
Well, so let's go ahead and get into the TradFi DeFi conversation.
Oh.
I knew you'd be excited about this, Annelise.
It's I think a lot of people are like, what is DeFi, right? What is decentralized finance? I don't get it. It's like crypto, and who knows? But it's actually super interesting. The idea behind, even if you go to Bitcoin in 2008 was Occupy Wall Street, and I was working on Wall Street. And you had a whole bunch of people that were sitting down near Wall Street, protesting the banks, because it was after a big crisis, and they wanted to have more access to their own money, right? The banks had more control. And so if you think about it, Bitcoin white paper came out right around that time. And so for me, it was more like for the people, right? It was a peer-to-peer payment. I'd like to pay you without going to the bank, right? And that's what it's developed into. It was just kind of an idea at the time it takes a while. I feel like every overnight success takes 7 years, by the way, right? You don't hear about it for the first 7, and they're like, wow, look at that. But it's a lot of hard work along the way. Well, decentralized finance is, I want to either lend or borrow money. And so I can do that to you, Laura. And so I can do it off of my own crypto. There's different ways we can do it online. There's kind of centralized exchanges, decentralized exchanges of where we can actually transact, but also lending protocols. And I think that's really big, because it's kind of like the world of private credit. They're very similar. So private credit is really, instead of going to a bank to lend money, right? Private credit is a private company lending to another person, which is absolutely boomed. Right? If you look at the multiples of increase in private credit, I forget, I feel like it's 300%, but I forget the period of time. That's the same thing as decentralized finance. So I actually want it. So I have, I've got crypto, and instead of wanting to sell my crypto, I want to take a loan out against it. And I want to do that because, yes, this is like lending on lending, and we can get into derivatives and other different types of things. But I think my crypto is going to go up. If you think about Bitcoin over time, Bitcoin's gone up. It was more volatile before, but with the ETFs and more institutions buying, it's less volatile. It doesn't mean it doesn't go up and down, but I still believe it as a long-term hold. But I would like to borrow money against that, and maybe I redo my deck with it, for example, which is what I wanted to do, but I didn't do that. Or I can actually buy more Bitcoin, right? And then if the volume goes down, it automatically liquidates. But the whole idea is like, I can lend to you, Laura, or you can lend to me. And however it sets up, we're taking out the intermediaries and we're creating a world where people can work more closely together. And it's not even just people, but you can talk about large flows of money coming in as well. Right. And so that's a big thing. It's like banking. It's the idea of it's harder to open a bank account than a wallet. If I am in a country where I don't have as much, like, identity is harder. When I lived in London, my job had to write a letter to the bank to allow the bank to open me an account. And this was a large company and a large bank. And so there's a lot of things in the middle. And yes, a lot of that is regulation that was created to protect investors or retail people. But I think it's just a way to make things more efficient, right? And the idea of being faster, safer, more secure. The problem was that safer bit can be tough, because if I use my credit card, and or someone, there's a charge on it that I didn't get what I had asked for, the credit card company will help me get that money back. Yeah. Now, that is not the case yet with stablecoin, but it doesn't mean we won't get there, because Visa and MasterCard are all looking at different ways to use blockchain and use payments, because they can save money. Because again, it's just faster, cheaper, more secure, right? Because it's secure, because it's on blockchain. This is not like people hacking into your account. Yeah. But there's different ways for that as well. Like cybersecurity, the whole world, I think, will continue to increase in cybersecurity as we continue to get more digital. So anyway, so I think I think there's a lot of interesting things out there. And then obviously, if you were a trader and into derivatives and tradings of stocks or what have you, those are the people that I think are drawn to like crypto trading. And if you think about it as, I mean, they're not backed by countries if you're thinking about currencies, but currencies have been volatile over time as well. And so there's different strokes for different folks. It's not my thing. I would never recommend a crypto to buy. But it's super interesting. I think it's just a step in the process, and also collateralization. So when things are collateralized, like, stocks are now becoming tokenized too, but say I have a share in a real estate building, right? I own so many shares in that. And then I could borrow against my shares, right? So it's easier. It's going to be easier to do. Like, you technically could do that, but not everybody can do that. But that's kind of opens up the world too. So if it is a tokenized violin, for example, someone tokenized a violin, you could borrow against the tokenized violin, because that could liquidate. Yeah. Anyway, there's a lot of different things out there that are kind of the future where you can go. But right now, we can open accounts, send money to each other. We can invest in different things. We can borrow against it.
Well, and you mentioned tokenization. I wanted to ask about that because I'm familiar with tokenization as far as security, measures, and you have a key and key management, and where are the keys, who owns the keys. Is that the same type of tokenization processes that you're talking about when you describe it?
Yeah, so I think there's kind of different words, I think, but they're similar ideas. So a wallet is like an account, kind of, right? And your key is like your password. And so yes, when you're tokenized, there's different types of wallets. So when you hold assets, you hold them in a wallet. It can be, a lot of people will use Coinbase, which is a publicly traded cryptocurrency exchange. It's the largest regulated in the US. Bigger than that is Binance, which is international. So you can go to Coinbase and get a wallet on Coinbase, and then it's kind of like an account, right? So it's easier. There are different wallets that you can have that are actually hardware. So you could plug it into your computer and take it away with you. The problem is, early Bitcoin people, a lot of them had those, and then you lose it and your money's gone. Yeah. So there's a lot of stories like that. But there's different types of wallets. They can hold different types of assets. If you're dealing with a security, then you have to think about custodians and who can custody your assets. Securities are a little different too, though, because you have that KYC element to a security. Like, anytime If I am to buy a stock, Fidelity's already done their know your customer on me. So they already know who I am. But in tokenized world, if I buy it, they know who I am. So that's Annelise's. And so nobody can really steal that, because if they steal it and they're not Annelise, they can just burn that one and mint another one for me. Yeah. So there's different protections around as well. So I don't want, like, this isn't necessarily a world of kind of the fraud and hacking. If you think of what really the big hacks, I do have a chapter in my book about this too, about like looking at what we can learn from mistakes. So, one of which is hacking, but generally what that's happened, it's capitalized on centralized exchanges. So they've happened generally on a centralized exchange where one exchange is holding the money and someone gave out information unknowingly that they got in. Usually, if your wallet is hacked, it's because you shared your passphrase or your keys with someone. It's not, they don't go in without that. So those are a lot of phishing attempts generally that come through. The other things have been hacked over bridges, because a bridge is not technically on a blockchain. You're connecting one blockchain to another. So there was a big whole hack, for example, that was over a bridge. So, but you learn from all of this, right? You learn different ways for protections. I don't want blockchains are, I would say it's impossible to hack a blockchain. It's not impossible, because there's always a tiny fraction of a percent from a risk perspective that it could happen, but that's not a concern I would worry about as a blockchain being hacked.
Well, it's interesting that you're describing kind of like a vulnerability point that is like an integration can create a point of vulnerability. Yeah. And we've seen that in financial services, across the board. So it's nothing unique. And I find it interesting now that, a lot of fraudsters are getting creative, where just to talk about generational type of experiences, now you have folks who are not digitally native being coached to create crypto, and you know what I mean, and share that information. To your point, share the entire set of data and information to access that account to a fraudster, but they're getting more intelligent in how to be able to kind of navigate that. But yeah, it's interesting to think about how fraud could evolve over time.
So different types of authentication, right? Yeah. Find different ways to protect your account.
Yeah.
But that's not just in, like, those aren't just wallets. It's just as much in the non-crypto world, which probably more so in the non-crypto world, because the non-crypto world is so much bigger.
Yeah.
And also the non-digitally native are generally like my parents, for example, right? That are a little less comfortable in that, the whole idea of Wi-Fi, right? If you let someone onto your Wi-Fi router. But yes, stay safe. It's not, I'm not saying I don't think that blockchain is really created for fraud in any way. I don't think there's bad actors everywhere. I think that they're just more, they're more fun headlines when you have it with something tied to crypto, because it started back in Silk Road ages ago when they accepted Bitcoin for payments. But think about technology, it leaves a fingerprint. So there's actually a great book called Tracers in the Dark that talks about how they track down a lot of that Silk Road money, and how they can track down different, because it's like following the course of money, but it's all digital.
Yeah. Tracers in the dark. Tracers in the dark. That's
Tracers in the dark.
All right. Christian, you got another question teed up for us?
Yeah. So kind of shifting gears a little bit, or ish. What are the biggest challenges preventing institutional adoption of digital assets?
So I think this goes back to the three we talked about before. First is regulation. So I was actually in DC last week. It was Crypto Week in DC. And so I've been invited down to talk to congressmen about, it was both the Genius Act, which is stablecoin, the idea of passing regulation for stablecoin in the United States, and then also the Clarity Act. The Clarity Act is putting definitions around what digital assets are, what the SEC is responsible for, what the CFTC is responsible for. This is so important because institutions can't play in the gray. They have to know black and white, and they can't think, well, the current administration thinks this way, so I think they're going to look at it this way, and then the next administration might think this way. Like, that doesn't work. And so having clear guidance is hugely important. So great last week that Genius Act passed and was signed into law, which is super exciting to have. It's really about regulating stablecoins, right? It's about, if your value is this high, then you report. It's making sure that they have the reserves that they say they have. So it's ideally that people are not being scammed. But if you think about the larger stablecoins that are out there, the whole idea it's not for scamming. It's really set up as a financial instrument. And so they're already following these rules. So it's just more of a reporting and putting structure in place, which is outstanding. The Clarity Act passed the House. It's going to the Senate. The Senate has some ideas as well. But I do think this administration will pass that too, which then it will make institutions much more comfortable in working with blockchain technology in general, I think. So payments is a killer case, right? Because we can automatically save money. We can do it today. We all see what it can do. And then I think that there's a lot of blockchain is kind of back office, which just makes most of us won't even need to know we're using blockchain. Like that's where I see the future going, is that we don't talk about it. Things are just more efficient. So the first thing for institutions is regulation. The second is education. And it's just understanding, what the risks are, if there are risks, but also understanding the technology and the applications and what it can do, and that Bitcoin and blockchain are not the same thing. I think that's hugely important. And then lastly is interoperability. And I only say this because a lot of the banks or financial, not even banks, just financial companies have had really old tech. There's always been a regulation that you have to keep record keeping, for example, right? And so generally you build a newer tech on top of old tech, and then so it's not a new technology. And then you have to plug in, how do you plug blockchain into the old tech stacks? And also usually every group is slightly different, right? Because the managing director was responsible for his own tech because it wasn't as coordinated. Unless you're in places like the gaming industry, because the gaming industry is newer and it's all technology. So that's an easier tech stack. But we're talking about finance, which is one of the oldest professions, right? And so we've always had kind of regulation there to protect people and ensure capital market efficiency. And it's trying to figure that out. So I think that's one thing, is how can we use this? And then also the interoperability between different chains, right? I think that's important, because if I do it on one blockchain and that it's private, because I want to use there's private and public chains. I equate them to the intranet, and the internet. So before we had kind of the World Wide Web, we had an intranet site at work. And it was like a bulletin board where we could post things, but it wasn't very helpful because it didn't access any outside information. It was just those of us inside. And so I think there's a lot of benefits. Like the private blockchains are great internally. JP Morgan has JP Morgan coin. That's on a private chain. That's fantastic inside of JP Morgan. It benefits them. But the idea of stepping out to the whole internet, where you have free range of access to all sorts of information and companies are actually built just on the internet, that's kind of how I look at blockchain. And so there's a lot more applications for it that we don't even see today. There's loads of people out there building super exciting things, more than we're talking about right now, because now we're kind of talking about the basic things to understand how it affects me. But it's super exciting. So I think those are the three things, back to your idea of institutions. One, understanding, like having clear guidelines. MICA in Europe has more clear guidelines. There's more out in Singapore. There's a Project Guardian, which is a sandbox that they have out there. Most of the people building on our blockchain, because I'm actually running the business side of a blockchain, are from Europe, because Europe had clear guidelines before. And so the US is a bit behind for this, but so it's interesting. They're more advanced. They're further along there. They've already tokenized XYZ, and they want to, they're running a business now versus coming up with an idea before they run the business. So yeah, clear guideline helps. Education, understanding what it is, its capabilities, and just being able to, how do we work together and plug in?
It seems to be kind of why crypto was kind of felt stuck for so long, was that it was lacking that regulation and that support, I think, because most institutions, especially financial institutions, tend to be risk adverse, and they'd rather know what you're expecting versus building it and hoping to not get slapped on the wrist, on the back end.
So true.
Yeah.
I will say there was Circle is a now public company. It went public 2-3 weeks ago. And what's amazing is, and this is stablecoin, even before the Genius Act passed, they have stablecoin. Their stock has just gone through the roof in weeks. And so to me, that means the institutions are in there buying the stock because they see the future to it. Yes. So this isn't just kind of a small idea now. Now it's like, wow, this makes a lot of sense. And so you have all sorts of people outside of just the government looking and thinking this is really important. You have the DTCC, which actually deals with securities, trillions of dollars of securities. You have SWIFT that deals with all of the payments that go through. They're all looking at blockchain and figuring out how do we do this, because they don't want to be RAID redundant. Because one thing that blockchain allows is to cut out intermediaries.
Oh, I was going to ask you the crystal ball question. What do you see in the future, maybe in the next 5 years? It's not that long. You mentioned how long it takes based on historical references to make change happen in this space. But if you could predict like the next 10 years, like how do you see this evolving?
Sure. I have a great graph on innovation, and it's just interesting kind of how you go from even like the wheel and fire, right? But with AI and just the advances in technology now, it is just like it's like a hockey stick almost of how quickly we are innovating. And so I think we're hitting right now with the openness of the United States from a regulatory and a legislative perspective. I think we're really laying the ground roots right now for having blockchain that we won't talk about. It'll just be whatever it is, right? I think there are kind of crypto assets, but I don't think a bond on blockchain is a crypto asset. I think that's a bond. I think digital dollar is, a digital dollar. I think there's a stable coin's a stable coin. So I feel like that it will differentiate from crypto, but it will drive so many things that we do that just make our lives more efficient.
Yeah.
So kind of where we go from a payments perspective, that's going to be the first. I think from an investment perspective, that's going to be there too. I think from, one thing I didn't bring up, the first university that asked me to come speak because they were using my book in their program, in their syllabus, was the Fashion Institute of Technology.
Oh, wow.
And I hadn't even thought, one, they've got a blockchain class, amazing for them to think of innovation in the future. But I hadn't thought about fashion as much, but it's really brand names and it's business. And they're not talking about the NFTs they're doing, but most all the big brands are using NFTs for product lifestyle, for counterfeiting. And so there's so many use cases out there. I think that lending will be less expensive because there'll be fewer people in between. There'll be less errors. So much money goes to errors for companies for them rectifying them.
Yep.
So I just think there's so many great benefits. So I think stable coins will become much more normal. I think we will have more access to investment opportunities than we do today from different outlets. I do think we're going to find accounts that aren't right now. My bank account is here, my Fidelity account is here, my crypto wallet is here, right?
Yep.
I think you're going to be able to have them in one place.
Yeah.
And it's going to be much more usable. So I think it's just kind of the next iteration. I think we're just going to get used to it and not even notice as it creeps in, but it's going to creep in, and it's going to make a difference from everything from our credit cards, right? Our credit cards to, maybe even electricity. There's different things called DPIN where you in essence turn, like, for example, there's one company where you turns your phone into, it continues to generate and things are run through your phone because it's a computer, and then it pays you, right? It's like the idea of solar paying you back when you're using different things like your phone, different types of infrastructure, decentralized infrastructure plays. So I think there's going to be a lot of cool things like that we don't need to know how they work because we're not so worried about how our phone works. We're just worried that it works.
The what versus the how. I actually thought about, since you said solar, I have we're in a community where Georgia Power invested in smart homes, and we have solar panels, and we're actually pushing back into the grid and getting a credit. And I'm like, where's that managed? Maybe the blockchain in the future. But all of that connectivity is important. Yeah.
I think we'll have other opportunities like that.
Wow. So, Christian, do you have any other questions before we wrap up?
For the students listening and the ones that are, starting their first jobs off and getting those first couple paychecks, what is your advice to them in regards to investing into digital assets and in that regard?
So I used to run a very large team at Moody's, and those first paychecks are tough because that means you also have to pay bills. And part of figuring out how to pay your own bills is one thing that I don't remember way back.
Yeah.
I would pay my bills for a while. So yeah, but it's just when you start, right? I would say just in general, I wouldn't even say about kind of investing. Obviously there's different, the more money you save now, it's worth more in the future, but you're also generally making less than you will be making later. Absolutely invest in your 401k, especially if there's a matching. But I would say, kind of as a younger professional, stay curious. Just keep reading and engaging your brain. I would say play nice, because it's not always the smartest person that does well at work. And generally, you want to be. I went to Columbia Business School. The first week, they teach you not to be that guy. And who is that guy? It's the annoying one. It's the one that is always problematic, the one that doesn't get along with anyone, the one that's smarter than everyone else. You don't want to be that guy. And so part of that is just like work hard, play nice. And that is so important in day-to-day work. Absolutely. Ask, volunteer to help on different projects, as boring as they are, because you will learn so much more and you will know more than other people because you did that, and it will help you in whatever way it did. You're also showing up, and so you're spending more time with colleagues and learning different things. So more important than any kind of investing or even touching digital assets, I would just stay curious in what you're interested in, right? Because if you find something like my job, yeah, obviously, it's job, but I love what I do, right? I love it's challenging, running so many different people and teams and strategy, and are we doing the right thing, or should we do this or that? Or, but I enjoy it. And so, sometimes right when you get out of school, I would say try to work with people that you appreciate. So the work might be similar to different things, but if you find someone that believes in you, super important, because I feel like your career is decided when you're not in the room. And so you've got to find those people that are going to challenge you and help raise you up, but also give you the opportunities. So doesn't answer the question exactly, but those are all really important things, I think, in your first couple years, that you just recognize. I made no money when I started. I was, I laugh at our apartment, and, you have roommates and what have you, but it's so fun too. So you've got to appreciate that. And it all comes around. It really does. It all works out. If you want, this is something also, Christian, that we had talked about a little bit before. If you are ever thinking about trying something different, network, talk to people, reach out to them. People want to help other people. Find someone that you have some similarity with is probably the first easiest thing. And that similarity could be the same university. It could be the same program. It could be something similar. But when I was at business school, I would reach out to people, and I had about 75% hit rate asking for coffee, for career advice. And it was just unbelievable, the people that would say yes and meet with me. And they didn't know me. So that, or find people that works for a company that you're super interested in. You can do that too, because that's a similarity as well. And just be nice. Don't ask for a job, ask for advice. Because as soon as you ask for a job, you put them on the defensive, and then they don't know what to say. People love to talk about themselves as well. So let them learn from their career, and don't be shy.
Yep.
But don't be that guy when you're reaching out.
Definitely. I think I relate to the networking part heavily, like being the person for our club that spoke to these different companies, reaching out to recruiters, cold emailing them. Just to touch on your point, like the amount of support that we got just being a new club from the Georgia Fintech Academy, and also these companies like NCR and Visa that were so eager and willing to help just from reaching out, just saying, hey, we'd love to learn more about what you do and more about the company. And then the collaborations form. So definitely for the students listening, like all it takes is just that first step, like reaching out and having the willingness to learn and being eager about it too.
Yeah, these are good lasting thoughts to leave with our audience. Annelise, any recommendations on how people can get in touch with you or can get a copy of the book?
Sure. The book is everywhere. I guess it's on Amazon, Barnes and Noble, wherever. You can reach out. LinkedIn is the easiest for me. I would say I was on Twitter too, but for some reason that's been shut off, but it should be back on shortly, which is funny. But LinkedIn, Annelise Osborne, you can always shoot me a note. I'm always happy to, connect and see if there's any ways I can help. I love LinkedIn, and why I like it is because I can read, when I connect with people, I find interesting articles. I find things they're interested in, and then I can I look at it as continued education. And so that's how I see LinkedIn social media.
No, I love that because you mentioned, finding something that you connect with an individual when you reach out. When you connect with people, you could see what they're commenting on and some of the posts they're liking, and that kind of also gives you some ideas of what you can connect with folks on. All your recommendations are good, Annelise. I mean, I feel like my personal experience, like especially transitioning from industry into this role, some of the things that you mentioned, a lot of our students need to hear. They don't necessarily hear that in the classroom or in some of their forums. So you summarized it really, really well. Appreciate the time that you spent with us today, educating us across the board. I feel like we might have to do another session in the future, or maybe even if you're in town, have you come in person on one of the campuses. But yeah, this is really great. I don't know if you have any lasting thoughts you want to leave with our audience of students and maybe professionals who are just interested in this area. Any lasting thoughts that you may have?
Well, no, I appreciate you all for being curious because you're listening. And so you're opening your mind and learning something new. So I really appreciate it and keep going. I say that I'm a cockroach sometimes. I didn't realize this one time, but it was like, what keeps you going? And I was like, I just decide you just keep going. You get kicked down, you keep going. So thank you so much for having me. Really appreciate it. And anytime I can help, I'd love to.
Perfect. Thank you. And thank you all for listening. We'll have more content here in the future. We will have in the show notes links to Annelise's LinkedIn, since you offer that opportunity, as well as links for you to go out and get your own copy of a book. I know within the Fintech Academy, we'll be doing some giveaways of some copies here in the near future. So thank you so much, Annelise. Thank you, Christian, for joining us today. And catch you guys on a future episode of Fintech Talks.